Hello there. In view of the high inflation, the Bank of England raises its key interest rates again significantly. It is the 10th interest rate hike since the end of 2021. So the British Central Bank has again significantly increased the key interest rates, but they are not the only ones. The Bank of England raised it by half a point to 4.0%, and many economists had expected the move already. And as I said, it's the 10th interest rate hike in Great Britain since the end of 21. At that time, the interest rate was just above the zero line. In the panel, however, the decision was controversial. It was made by 7 votes to 2. Nevertheless, the central bank signaled that interest rates could soon no longer be increased. The central bank is reacting to the high inflation by raising these interest rates. According to central bank chief Andrew Bailey, however, the rate of inflation is likely to fall this year. The inflation rate in Great Britain had already fallen from 10.7 to 10.5% in December, and in October it had reached 11.1%. That was the highest level in 41 years. Nevertheless, the economic situation in Great Britain is not particularly good. For 2023, economists surveyed by the Reuters news agency predicted a drop in gross domestic product of 0.9%. Numerous labor disputes, high living costs, and also rising interest rates, which are causing higher borrowing and mortgage costs, are currently contributing to the downturn. On Wednesday, the US Federal Reserve also raised its key interest rate by 0.25 percentage points and at the same time announced further interest rate hikes that are soon to come. In order to curb the high inflation in the euro area, the European Central Bank, the ECB, has also decided to raise interest rates again. The key interest rates in the Eurozone will rise by 0.5 percentage points to 3%. That's what the currency watchdogs announced after their monetary policy meeting in Frankfurt. It is the 5th rise in interest rates in a row. The central bank last hiked interest rates by 0.5 percentage points in December. The interest rate in the Eurozone has thus risen to its highest level since the end of 2008. However, according to ECB President Christine Lagarde, the fight against high inflation is not over yet. At the press conference in Frankfurt, she therefore said that the ECB will remain on course to raise interest rates steadily and significantly. A further increase of half a percentage point was held out for the March interest rate meeting, so we can expect it then. An assessment of the rest of the course should then follow. The inflation rate in the Eurozone fell to 8.5% in January after 9.2% in December, and so it's 2% below the British one. That's important when we always talk about Brexit. The rate weakened for the 3rd month in a row. But the monetary watchdogs are not yet given the all-clear. Core inflation, which includes volatile prices for energy, food, alcohol, and tobacco, has recently remained at 5.2%. The ECB is concerned that high inflation could become entrenched and that long-term inflation expectations could get off track. In the medium term, the ECB is aiming for inflation of 2%. According to the ECB, interest rates should not only rise steadily but remain at a level that is restrictive enough to ensure that inflation returns to 2% in good time. Lagarde said that all measures needed to do so would be taken. And you just heard me say 5.2% inflation for food over the whole EU. It is 16.7% in the UK at the same time. And now, think again. And I'll see you in my next video. I'll be back.